Hi, I'm Kelly, Investment Advisor at SBS Wealth, and I'm hosting your quarterly investor update today. This last quarter was a game of two halves. Here's the things that mattered most for your money. Firstly, the conflict in Iran. Secondly, will AI companies deliver sufficient revenue to justify the hype? And lastly, how are we adapting to these market changes? Let's walk through how this played out for your investments, what you can do in just 4 minutes to stay in control, and the unique advantage you may not know you have. Here to walk us through what actually moved the numbers, we've got our Chief Investment Officer, Martin Pike. Martin, tell us about quarter one.
Thanks, Kelly. So quarter one started with concerns from investors that all the money spent in AI, whether it could be justified and companies could make some profits from that. So all technology stocks went down in January. In February, we saw some of the larger ones show that they can sustain that, and their price came back up again in February. And then at the end of February, we had the conflict in the Middle East. This caused share markets to go down. They were volatile. Oil prices went up. Bond markets went up. There was nowhere to hide, and you would have seen that in your investment balance during March.
So there was a lot going on, Martin. What specifically concerned you during the quarter?
The biggest issue is obviously the volatility from the geopolitical events in the Middle East. And it's obviously very hard to predict when that's going to start. Mm-hmm. So trying to avoid it is impossible. And then the other part is trying to second guess when it's going to stop. So for us, we just have to ride through that and use other tools to help protect our investors' money.
Okay, so what action did we take to manage these concerns?
Yeah, so a couple of things we did is the first one is diversification. Mm-hmm. Obviously, we have a large exposure to technology stocks. So to help offset that, we also got exposure to emerging markets, which do different things over that time. We have exposure to Australian large cap stocks, which have held up well in that pair, and some of the defensive stocks, consumer staples, infrastructure, and global infrastructure. So all those stocks have done well over the period to offset our exposure to technology. Mm-hmm. And the other thing is because of the AI changes going on at the start of the quarter and the concerns about those, we've reduced our exposure to the AI software companies, which are at the top of the stack, mm-hmm. And increased it further down. So below the software companies, we have data centres and cloud infrastructure. And then below that, we have the things that make those run. So that's the semiconductors and the networking, the electricity. So we've increased our exposure, particularly to the semiconductor side of it. Taiwan Semiconductors, AMSL are two names to start with, as well as the electrification side and the data centre side.
So that's what happened in the markets. Now we're going to switch and talk about what you can do in just 4 minutes to stay in control of your money. To talk about this, we've got Dennis Errol. Dennis, we've got some amazing new technology to support our clients. Tell us about that.
Yes, thanks, Kelly. In these uncertain times, it can lead to a lot of us thinking about how to plan for the short-term uncertainties that we're encountering. But for the most part, KiwiSaver is a very long-term investment for the most of us, and we need to plan accordingly. And to help us refocus and gain control of that again, I'm going to take our clients through a few key steps in using our new KiwiSaver projection tool. And at the end of those steps, I'll ask our clients to pause the video for 4 minutes and work out their balance that they could potentially have at age 65, and importantly, what that balance could provide them as an income from age 65 as well. Step 1. Open the KiwiSaver projection calculator by navigating to the top right-hand menu inside the SBS Wealth portal. Answer a couple of quick questions such as your contribution rates and your income, and then click See Your Results. We will then project your balance at 65 and tell you what that could mean to you as a monthly income. You can play around with things like your retirement age, contribution rates, and investment profile to see how that impacts your retirement figures. If you want to talk to an advisor about how to optimise your retirement, we're only a phone call or an email away. Your advisor's details are also available inside the SBS Wealth portal on the KiwiSaver account page.
That's great, Dennis, but what about people that are already turning 65 or just about to retire?
Great question, Kelly. Our tools are built for our clients to be able to gain a lot of certainty and confidence in planning their futures. When we retire at 65, we're living healthier, living longer lives, and 25 years is still a long time frame for which to plan for. And our tools are built to be able to give you that confidence to plan for that time frame.
Okay, thanks, Dennis. So for clients that have already paused the video and done that, or are planning to do it at the end of this video, they're already ahead of most people. Here to talk about the unique advantage that you have investing with SBS Wealth, I have our CEO, Morné Redgard.
Thank you, Kelly. I'm here today to talk to you about 5 unique features of our business that give you, the investor, an added advantage by investing with us at SBS Wealth. We're one of the original KiwiSaver schemes that go all the way back to 2007. Outside of KiwiSaver, we've been managing New Zealanders' money since 2003. In that time, we've seen the markets move around quite a lot, and as you've heard from Martin today, the volatility in the market we've seen before many times over the last 20 odd years. What's important to remember is these are long-term goals that you've set and your advisors have helped you set. So staying in the seat for a long period of time is really, really important. Secondly, we are member-owned. Why is this important to you? Well, SBS Wealth is owned by the members of SBS Bank. This is important because our profits remain in New Zealand. These profits are invested in the communities around you, which makes them more resilient and makes New Zealand a more resilient country as a whole. Thirdly, we are a proud member of the Responsible Investment Association of Australasia. This is really important because we take this responsibility of investing in sustainable companies really seriously. Also, what is very topical at the moment, we exclude any companies that are associated with the production or distribution of weapons. We're top of the tables. I'm proud to announce that at the end of December 2025, our SBS Wealth High Growth Fund was top in its category over a 5-year period. We're number 2 over 3 years and number 3 over 10 years. This shows that we have a sustainable and long-term investment philosophy that has worked over very long periods of time. Lastly, we're an advice business. We want to stand shoulder to shoulder with you and help you achieve those long-term goals. The long-term goals in investing up to retirement, but also for those long periods in retirement, as you heard from Dennis.
Thanks, Morné. I love the fact that we're member-owned and our profits stay in New Zealand, and that top performance is pretty fantastic as well. So there you have it, the first quarter of 2026 complete. Thanks for watching, and we'll see you next time.